Good morning, everybody. It's Bruce here. Stock Markets with Bruce, where we try to explain what's happening in the in the markets in plain English, and what is happening in the markets in plain English in the pre-market is pretty simple. There's selling coming in. That's what's going on. We've got a number of
Plain
things
English
going
in
on
pre-market
at
is-
the same time. It's a multi-level. It's like 3D chess at Star Trek. You know how they play all those level. This is what's going on in the world right now. Lots happening all at the same time, and the market participants out there, whether they're in Europe, Asia, North America, they're all trying to figure out what should they be doing and where and how and when. And I have to kind of explain to you folks in a bit of a sequential order what's really causing all of this, what's going on. But as I sit here, the Dow is showing a loss of 504 points in the pre-market with an hour to go, which is 1.4%, 1.5% roughly. S&P index showing down 53, which is down 1.2%, and NASDAQ is showing a loss of 155 points right now, which is about 1%. So these numbers are very low when it comes to overall percentage terms, in the relative big picture here. But the numbers are, juicy for the media. They love this. The media that doesn't know how markets work, they see a 500-point drop in the Dow and they get all excited. They all get giddy. Oh, the Dow's down 500 points. Of course, in 1980, a 500-point drop would be, most of the Dow. Today at 34,500 to go to 34,000, not much of a drop, but it is a drop.
Why are ME shares so locked up for 7 years, and is this causing the current low price? No, actually, that's a good thing. Insiders of ME are saying to the market, we're not selling for at least 7 years. We're committed to the cause. We will work this company much, much stronger, much further down the road before we can sell any of our stock. That should take off the minds of existing shareholders any worry about insiders selling on ME. This is a good thing. Where will the buying on GameStop come from? Seems people are more about holding than buying. Well, shares change hands all the time, and they change over all the time. Believe me, there are billions of dollars waiting to go wherever the next deal is perceived to be. And when the market believes that GameStop is about to become much more valuable as a corporation, they'll jump into the stock. GameStop has had trading as high as 200 million shares a day when they were $300 and $400 a share. So we have seen tens of billions of dollars go through this stock in a week. It can happen at any time. All depends on just corporately how it's going. So when these newer SPACs merge and they fall almost under entry price, is it just hedge funds selling to profit on a short position? Obviously, retailers like us are selling. Matt, it's a million reasons why these are doing it. But I have to say that in the last month or so, there's been a real a shift away from growth stocks, and it has hurt the small cap companies, and that's SPACs for sure, and many thousands of other stocks that are under $50 a share. There's just been a real exodus of money into other areas, but what goes around comes around, and what ends up happening is when the money comes back into growth stocks, they look for the companies with the greatest growth potential, and that's where your SoFis come in. That's where your Gore's Holding comes in. ATIP, ME, all of these SPACs have tremendous growth opportunity. They're sitting on a mountain of cash. They have no debt. So you'll avoid growth stocks with debt. You'll buy growth stocks with no debt, with lots of cash. And that puts these guys in the top 25, top 50 picks of hundreds of millions of investors around the world. It's just a matter of time where the markets come the other direction. And this is the first area they'll go into. Just saying. Just saying. How do drops like this actually happen? How is it that everyone on Wall Street knew that this morning would be the morning that we were all going to get scared of the Delta variant when it's been a concern for months? I hear you. The reality is that the Delta variant, I've been talking about it for months. I've been talking about it for a long, long time. But Dow doesn't listen to me. Yeah, I mean, I got 1,000 viewers here. Who's going to listen to this guy? But I think what shook up the Dow was when Asia and Europe both reacted today, and those headlines came out in Europe about the variants. Now America's getting it. Now all of a sudden, well, if the Europeans are worried and the Asian market investors are worried, maybe we should be worried. And so it's kind of filtered over here with a 705-point drop right now on the Dow. So Uncle Bruce, the 2008 crash had a Dow drop of 1,000 in a single day. The Dow down 800, how far would this have to drop to signify a large crash? Well, when it dropped 1,000 back in 08, the index wasn't at 34,000. The index was at like 9,000. And then it dropped 1,000 points. The impact of a 1,000 point drop back then in percentage terms, massive. Massive. And when Paulson and Bernanke came to Congress to seek a $700 billion emergency bailout of the financial system to avert a global financial catastrophe, Congress voted no. Then they came back a week later with another proposal and then they voted yes. The stock went down 1,000 and went up 1,000. Because a week later, Congress figured out, oh, maybe we should have approved that deal. Unbelievable. What do you think about high, low volume, Bruce? Does the definition change from stock to stock? Yes. Different stocks have different ranges of normal trading. And in some cases, like SoFi, it used to be they would trade 2 to 3 million shares a day, maybe 3 to 4 million shares a day, about like a month or so ago or more. And now SoFi is trading at 15, 20 million a day. That's higher volume. And I think SoFi will trade even higher volume going forward. Soon this stock will trade 25 to 50 million every day or more, just as more awareness keeps coming into this company and their story. Why do you think Gores is down pre-merger as opposed to usually sticks moving up pre-merger? Is that the nature of the beast or something where it fears? I think it's the market. I think it's the market as a whole. I think that's the problem. I think that the variant talk, interest rate talk, inflation talk, China-U.S. relation talk, growth stocks under pressure talk, stocks, SPACs being picked on by short seller talk. I think that's all it is. I think it's just the market. It's not the company. Nothing that Gores is saying or not saying. They have nothing to do with it. Can you explain a bit what does a market crash mean to stockholders and option writers? If the NSYE, the New York stops, does that mean we lose the stocks we own? No. Now, a market crash is simply an expression of a down day or a down week or a down quarter. A correction means the markets drop between 5 and 15%. Sometimes 18% drops are called corrections. A market crash is something like a 10% drop or more in a day. That would be a market crash because that's unusual to have that kind of a down dip. But no, trading continues. Don't forget too, those of you who don't know this, the New York Stock Exchange has enacted what are called circuit breakers in their markets. The circuit breakers kick in when markets drop too far too fast. And I believe if the Dow dropped 7 percentage points at any moment in like a 30-minute window, if the Dow were to drop 7 percentage points in that time frame, anytime during the day, the market would get halted. The entire stock market would be stopped. And they would wait 30 minutes or 15 minutes for the market to gather itself again, give people chances to put in buy and sell orders, rethink their trades, and then reassign, reassess, open the markets up. If the markets trade down again, another 3 or 4 percentage points, they halt it again, and then they let the market reassess. And again, it's like 20 minutes pause. They reopen it, drops again. They do another halt. Like there are now circuit breakers that come in. Whereas in the old days, the markets could just go down, and there would be no stopping it. And if a bunch of attackers came in, like short sellers and others, they could just create all kinds of havoc. But now with circuit breakers, you get these stops. You also have these officials in the New York Stock Exchange monitoring who's doing what. And if they find that there's nefarious nonsense going on, they'll step in there. they can suspend member firms from trading, and that'll stop orders from coming in, to just, especially if they're just sells for whatever reason. But again, I've never seen that happen, but I know it can. Crashes are it's an overused expression that I wouldn't get too excited about. You have to really guard yourself against getting caught up in the hype of a market crash headline. It's all bunk, and markets adjust up and down on their own naturally. They figure themselves out, and they always keep trading. Options never go away. Stocks never go away. You will always be trading. There will always be liquidity. Alrighty, there it is.
Get ready, kids. This weekend, oh my God, it's happening noon Eastern time for each class, Saturday and Sunday, live right here. And Bruce will be on the whiteboard just going. This can be great.